Hello everyone, good morning and welcome to this educational presentation of intermediate term trading is simple with the new PTS Primo platform. Now we're going to change things a little bit on this Saturday morning's webinar. Usually we talk about trading and anywhere from intraday to daily charts. We're going to kind of go out a little bit further with intermediate term trading, which if you're not familiar with that, it's anywhere from holding a position to 3 or 6 months to actually 3 or 5 years. Okay, that's more intermediate term. After that, we go into investing, which is holding on to some type of portfolio for 5 to 10, 20 years. But we'll keep it intermediate term from anywhere from 3 to 6 months to 3 years. And let me share with you what I'm going to be teaching you today. As we look at this chart here, this is a chart in Netflix, a weekly chart going all the way back to 2016, so roughly about a couple of years ago. I'm going to share with you a technique where you could have actually entered right here at this point. Okay, and we all know what happened after that. Netflix gained roughly over 200 points in the next 1.5 years. So we're not going to go into detail in terms of a full-fledged trading plan in terms of exiting or in terms of stop placement, but we're going to show you a high probability point for entry. So this promises to be a great Saturday morning webinar. Thanks for joining us today, and we're going to be sharing with you all this information, how easily it can be accessed on the PTS Primo Charting platform. We feel strongly that this is the trading educational portal you've been searching for. I teamed up with Pro Trader Strategies, and we developed this educational portal where it has everything I've accumulated in my 41 years of trading, and it's all right in front of you, just one click away. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, we are all about educating you. In fact, that's our sole purpose, just simply to educate you. We're a little bit different from other webinars in the fact that we don't promise to have the world's greatest system. We don't do back testing where we go back 5, 10, 20 years and show you how wonderful this produces profits on a yearly basis. In fact, we don't believe in that. It's our belief that the only way one becomes a consistent trader is not through the perfect system or through the perfect guru, but it's through education. See, education is the only thing that will sustain you, because if you're educated, you can make your own trading decisions, and that's what we're trying to do. Now, I've been trading for 41 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist doesn't mean you're any more special than anyone else, just means that you specialized in making markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, you went up to the trader, the floor trader on the floor, who specialized in that particular equity. Okay, so I did that during the crash of '87 and the bull market that followed. I've been trading after that for about 30 years after that. I've been managing money, trading my own account. So I know what works in terms of consistency, and I know what doesn't. I've traded just about every technique system you can think of, every market environment you can think of, every market you can think of. So in my 41 years, I can really shorten your learning curve so that you don't have to be waiting around a long time in order to become consistent. And the way we do this is by providing you with sound fundamental education. So I have a great educational technique for you today and showing you how to enter into these intermediate term trading models. But before we begin, as always, we are first required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, show you a lot of charts using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all the examples I'm about to share with you are strictly for educational purposes only. Now, if you haven't done so already, I'd like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there, at SPCLSTTRADG. You may want to write that down to copy us, to follow us, I should say, because every day I post different information, anywhere from little bits of wisdom I've accumulated to actual signals that our strategies have generated. In fact, we post signals or information on all the markets, on all the different time frames. Just yesterday, the day before yesterday, we posted that one of our strategies had generated a sell signal in the Australian dollar currency pair, and it was down roughly close to 100 pips in just 24 hours. So there's a lot of great free information. Feel free to follow us on Twitter. Okay, so as I stated, our only goal is to teach you how to trade, not to force feed you signals, not to force feed you the perfect market or time frame, but simply to teach you how to trade. When I was struggling some 4 decades ago, my mentors taught me the same concept. I wanted to just mimic and follow and match all of their trades, and they wouldn't allow me to do that because they said, Steve, if you do that, if you copy everything we're trading, then you're not going to learn anything. And then when we finally leave the floor, when you leave the floor, you're not going to know how to trade. And at the time, I didn't want to hear that. I just said, listen, just tell me what you're buying or selling, and I'll just do the same thing. But I was so grateful that they didn't do that because ultimately it taught me how to work things out for myself, how to make my own decisions. And I think this concept and this style has been the cornerstone of what sustained me for over 4 decades now. So this is what I'm trying to do to all our students around the world in over 110 countries and in virtually every state, is to provide them with sound fundamental education, but not tell you how to trade, not tell you what the perfect market is, the perfect time frame, but let you decide on your own after you've been supplied and mentored with the proper education. So this is what our goal is, to teach you how to trade with the specialist edge. The same edge that turned my trading around, hopefully it will be able to turn your trading around. So you can be trading not for just a couple of months with success, but hopefully for a couple of decades, maybe 3, 4, 5 decades, okay? Now, since this is going to be an educational class, I'm going to share with you a lot of information. I do want to take your questions, but I don't want to take all of your Saturday away from you. So in order not to stop at each slide, please wait till the very end of the class to ask any questions. It won't be very long. This won't be a very long class today. So roughly in about 20 minutes, we'll conclude, and then we'll reserve the last portion for any questions that you may have. The only question I will answer at this time is this being recorded? Yes, it is. We record all of our presentations. So if you're having difficulties hearing my voice or seeing the screen, or if you have to leave early, don't worry. We will send you a link to this recording. Also, if you're having technical difficulties, oftentimes it's your internet connection. So if you log off and then log back on, the problem will be resolved, okay? All right, so if you joined us late, we have a good crowd here today. Please wait till the end of the class to ask questions. So let's begin. We're going to talk about an intermediate term trading technique. So we're not going to be focusing on looking at intraday bars. We're not going to be looking at even daily bars. We're going to be looking at a little longer time frame, roughly starting at weekly bars. And the reason why we underline and highlight technique is because a technique is different from a trading plan. You'll see me sometimes on Saturdays, I'll give you a full-fledged trading plan showing you where to enter, exactly where to exit, exactly where to place your stop. That's a full-fledged trading plan. That's a strategy. Well, a technique is different in that it's one piece of the puzzle of a plan, of a strategy. So we're just going to share with you these high probability entry points. Okay, that's what a technique is. It's going to be up to you to decide where to enter, where you get out, where to place your stop, where to get out if you're wrong. All right, now we teach these things in our courses, but I'm not going to charge you for today's class just so that you can learn these things. So I'd rather just tell you what these high probability entry points are, and then you can work with them on your own to decide where you'd like to get out, where you'd like to take a profit, and you'll just see how these work very well. But please remember that this is just a technique. It is not a full-fledged strategy. All right, so here are the requirements for this particular technique. There are only 3. The first thing is we're going to start off looking at weekly bars. All right, now once again, I've looked at this technique for some time now, and it can be applied to daily bars. It can even be applied to intraday bars. But because of the noise and because of the the volatility back and forth on the smaller time frames, you tend to get whipsawed a lot, and you'll get a lot of false setups. So I would rather, in my opinion, use this for weekly bars and going out further time frames. Once again, it has shown some relatively minor success with smaller time frames. I personally would rather use it for a larger time frame, starting at weekly and going out further. Okay. Now we want to use the fluid buy-sell line. I've talked about this before. The buy-sell line is simply the 50-period moving average. We call that our buy-sell line, and the reason it is because the 50-period moving average should be plotted on your weekly time frame, on your weekly bar, and if price is above, you're only going to be looking at the market from a buyer's perspective. If price is below, you will only be looking at the market, you're trading from a seller's perspective. It is not telling you where to enter, it's not telling you where to exit, it's only telling you what side of the fence to be on. But this tool is so highly powerful that I use it for everything. everything. I mean, even when I'm intraday trading E-mini S&P on a tick chart, I use the 50-period buy-sell line. That's how powerful it can be applied to any market, any time frame. Now, when we say fluid, that is a special feature we have on our new PTS Primo Charting platform. I'll show you what it is in just a few minutes. If you haven't seen me talk about it before, it is probably our most popular way of viewing the buy-sell line. We've gotten rave testimonials about how great it is and how it helps people, and I'll show you exactly how to apply that in just a few minutes. So we're using weekly time frames, we're applying the fluid buy-sell line, and then we're using Darvis boxes. Now this is something I haven't talked about before. I've been experimenting with this for some time now, but this is something that's basically new. It's offered on our new PTS charting platform, and this has been around for ages, actually going back to the 1950s, 1960s. It was developed by Nicholas Darvis. So let me just give you a little bit of background if you're not familiar with Darvis boxes. Nicholas Darvis was actually, he wasn't even a skilled or educated financier back in the 40s and 50s. He was actually, I believe, a dancer. But what he did is he liked to study and look at patterns in the charts. And he found out that looking at this, he took basically a $10,000 investment and turned it into $2 million in the 1950s. So this was, at that time, we would be talking about, a multi-millionaire in today's markets, okay? But here's the definition of his boxes. Now, the most specific definition Nicholas Darvis provided was as follows. Quote, the top of the box is established when the stock does not touch or penetrate a previously set new high for 3 consecutive days. So we're looking for some type of top to be formed, a pivot high, and it doesn't touch for 3 consecutive days. This is true in reverse for the bottom of the box. So all of a sudden, that will be the top threshold. When you get a bottom, sort of a pivot low being created that isn't previously touched for 3 consecutive days, that creates the bottom of the box. So what we use these for are high probability entry points, but we have a specific change or an edit we're using with the help of our new PTS charting platform. So let me show you exactly how this works, okay? And it's very simple, may seem a little complicated, but remember, this is just a technique showing you where a high probability entry point is. In order for you to decide where you enter, where you exit, where you place your stop, that's going to be up to you in this phase, all right? All right, let's take it step by step so that you fully see how simple it is to implement on our new PTS Primo charting platform. All right, step 1. We want to choose the weekly time frame of the stock you're interested in. All right, now we're starting with stocks here, but as long as you have a weekly time frame, you could use this on futures, currency pairs. You could use this on Bitcoin if you wanted to, but we'll just stick with stocks for right now to keep it simple. But remember, we want to start off with a weekly time frame. So on our new platform, all you have to do is punch up the stock, and then if you don't choose the initial chart as weekly, you can change it here in our time box from daily, weekly, intermediate, monthly, yearly, whatever you'd like, okay? So this is a weekly chart of Netflix. Step 2, we want to click on the buy-sell line in the upper green strategy tab. Now remember, if you don't have our platform, you can just plot a 50-period moving average, but this is the beauty of this. Once you click on the buy-sell line, and we make things so simple for you, it's all right here, one click away, you get this drop-down menu. You can have the standard 50-period moving average, our background feature, our color ribbon feature, but this is by far our most popular and successful. This is the fluid feature. So this is what you want to do. You want to click that on, and once you do, automatically the chart will stay the same in terms of the prices, but the background will change. Anything above the 50-period moving average is colored a light blue. Anything below is colored an orange reddish, okay? Now you can alter and change these colors to your liking on our platform, but this seems the simplest, and this is the standard default color. So what you want to do is, if price is in the upper blue area, that's the buy zone. Okay, that's telling you that it's okay to buy. And as you can see here, once we crossed here consecutively, don't you think that you would have want to been looking for places to buy here? Because it's almost like magic that as long as we're in the blue zone, prices continue to go up. And once we cross over into the red zone, well, that's the sell zone. So you only want to be looking from a seller's perspective. Now, here's where most students have difficulty. They think, gosh, Steve, this is great. So the way I understand it is the minute price will go into the red-orange zone, I'll just sell, right? No, because that would mean that this is some type of strategy or a setup for initiating a trade. And the buy-sell line is not. It's just telling you the zone that you should be in, whether looking at things from a buyer's perspective or a seller's perspective. That's the power of this and the beauty of the buy-sell line. You can apply this to an intraday chart, a monthly chart, a yearly chart, a weekly chart as we have right here. It works just as well in all those different time frames and in any market, really, since we're only focusing on stocks right now, but it wouldn't matter what market you're looking at. The difficulty is most traders, when they're just beginning, they think this is a full-fledged system, which it's not. It's not telling you at all where to enter. It's not telling you at all where to exit. It's just telling you what side of the fence to be on. So in other words, in order to trade it, you need to add some structure. All right. So in other words, what we've done, I said this in other webinars before, what we've done is identified a fast flowing river. Okay. That's going to take us from point A to point B, and we know the direction of it. All right. Now we need some structure in the form of a raft or a boat to take us down that river. That's what we need right now. And we're going to do that with step number 3 in the form of the Darvis boxes. They are a structure. So we're going to click on the Darvis boxes in the upper view tab. So the way to access them on our platform is to click on the view, a drop-down menu will appear, and you'll click on Darvis. And this is what happens. You get these boxes that are created from short-term pivot highs and short-term pivot lows. We see some here that are created kind of half and half in the buy and sell zone, some that are completely in the sell zone, and some that are totally in the buy zone. So how do we use this? How is this going to apply to our trading? Well, the rule of thumb is the first all green Darvis box to appear in the fluid buy zone is a high probability buy area. So the first all green Darvis box to appear is the one that we're interested in. So as we look here, we see that we're kind of oscillating above and below, but here is our first all green box. So that was our point of entry. Remember, you can do this wherever you like. Somewhere when price is in this box, you could buy whatever you want. You could wait for a breakout. You could put a limit in, regardless. But that should be your initial site for thinking, I've got to start being interested in purchasing this, because the market is telling me it most likely is going to continue on an upward, nice intermediate term uptrend. Now, this was at the end of 2016, beginning of 2017, just a little over a year ago, about a year and a half ago. Had you taken advantage of that, well, look at, you saw the markets just take off. Roughly, we went almost, we've been continuing to go up. And this is a current chart, by the way. This is up until this last week. So roughly, you could have purchased anywhere around the 120, 125 level. And now we're in the 300, so a couple of hundred points higher. So this is how this technique works that I'm sharing with you today. We're simply trying to identify high probability entry points. Now, this can also work to the downside as well. I know a lot of traders do not like to short stocks, even though it's as simple as buying puts. But just let me show you the opposite side of the coin, because you can also apply this to selling if you're so inclined. So here are the rules step by step. Step 1, once again, choose the weekly time frame of the stock you're interested in. We're saying stocks today because it's easy to apply to the market, the stock market. But once again, if you like to trade futures, if you like to trade currency pairs, you can easily apply this to those markets as well. All right, so we see here a weekly chart of GE. Once again, you could just simply click on the weekly time frame here in the upper weekly tab. All right. Once you do that, step 2, click on the buy sell line in the upper green strategy tab. And this process will take you roughly about 5 seconds to do with our new platform. Click on buy sell line, the drop down menu appears, and we click on fluid, and automatically we know the buy zone and we know the sell zone. We see here that price was oscillating above and below. And remember, this is just telling you what side of the market to be on. It's not telling you, in other words, right here, once we closed up above in the buy zone, it's not saying to buy. Because had you bought and hold, you most likely would have lost a little money, because then you would have sold here. Now, sure, someone would say, yeah, but Steve, when I sold, look what happened. Well, sure, but the better way, if you want more consistency, is simply to use this as what we call it, a buy-sell line. If you're in the blue, light blue area, the buy zone, you're only looking at the market from a buyer's perspective. If you're in the reddish-orange zone, you're looking at the market from a seller's perspective. Okay, so we know now which way the river is flowing. It's flowing down, right? In hindsight, this would have been a great sell. Let's say we were long the stock in our portfolio. Let's say we're not a person who likes to go short, but we wanted to know when to get out, because this stock was roughly trading around 30 just last year, and now it's down in the teens. How could we have known? Well, the first thing you would have known is once we had consecutive closes in the sell zone to get out, obviously. But if you wanted a little more structure, you click on the Darvis boxes in the upper View tab, okay? Because that will give you a little bit more structure. We click on the View, a drop-down menu will appear. You simply click on Darvis boxes, and now you have them, okay? As you can see, we're oscillating above, now below, mostly below here, but still have some green above. But here is our first kind of pinkish box that is entirely below and in the sell zone. So the rule of thumb is the first all pink Darvis box to appear in the fluid sell zone is a high probability sell area. So if you were long the stock and you were thinking about getting out, that would have been a good place to think about it, roughly about 26, 27, before it went down to 12 and 13. Okay, you would have lost 50%. You see that? How that would have worked in GE, and where people are telling you, well, you know, the company has been giving you terrible indications about its earnings. It's lost a lot of stature with the CEO and the upper management. You can look at that if you want to, but the market was telling you a year ago to get out with the structure right here. It was below in the sell zone, and we had some structure with the Darvis boxes giving us a high probability exit point. So you see how this really helps you apply structure to intermediate term trading. Once again, you could apply this to 5-minute charts if you'd like, but there'd be a lot of noise. You'd have to be quick, and you'd have to devise a really disciplined plan to get in, to get out, to exit quickly, because there's a lot of backing and filling. It seems to run a lot smoother when you're looking at higher time frames, starting at weekly charts. Okay, so you understand the concept now. You understand how this works. Let's look at some more examples, and we're going to focus on stocks. But please remember that that's just for educational purposes only. You can apply this to Bitcoin, to commodities, to futures, to currency pairs. It makes no difference. Okay, so we look here at Amazon weekly. All right. Now we see here going back to 2015, almost 3 years ago, we were oscillating above and below the buy-sell line. Once we had consecutive closes above, this is where people have difficulty. They say, well, Steve, okay, I know I'm in the buy zone now. And I know that I'm supposed to be a buyer. I just don't know how to get in. You know, the strategy I have didn't give me any clear-cut entry point. So when do I get in here? Well, that's where the Darvis boxes come in play. Here's the first green box circled in green. That could have been your entry point. Roughly about, we know it's expensive stock, roughly about 300, 350 points. But the stock is up in the 1600s now. And, you know, 3 years later, you could have made 5 times your money if you continue to hold on. Remember, once again, we're not talking about exit points or stop placement. We're simply sharing high probability entry points. Let's look at Facebook. Okay, here's a weekly chart of Facebook going back to 2013, just after the IPO became public. About a year later, we finally had consecutive closes in the buy zone. Here's our first solid green block, our green box above in the buy zone. And we've continued to go up until right here. This is a current chart coming into this week, and it looks like we're in the sell zone, but we don't have a complete box completely in the sell zone. But this is interesting, something to note, that we may be switching the intermediate trend with Facebook. We'll have to watch this for the next 2 to 4 weeks to see how it plays out. Now here's an interesting point in how the trend changes, but how the Darvis boxes can switch you out of one and get you into another. We had a clear-cut sell signal right here going back to 2015 in American Express. That was our first pink box that was completely below in the sell zone. You see these other were kind of oscillating above a little bit. They had some green in the box, but this box is completely pink. Anywhere right here you could have gotten out, roughly about $75. The stock went all the way down to 50. Okay, lost a third of its value. You could have, you know, been out of the trade altogether. And then right here in 2017, the first quarter, roughly about a year ago, we had an all green box in the buy zone. This was your buy area, roughly around 80, and the stock has gone into the hundreds as of late. How about PG? Okay, here's another example of trend changes. We had our first all green box above the buy zone, in the buy zone, I should say. This was going back to 2016. The stock had some minor success, going from roughly 80, the low 80s up until the mid to low 90s, about 10 points. But right here, at the very beginning of this year in February, we had our first pink box, completely in the sell zone and below the sell zone. So this was a clue telling you that if you're long the stock, you may want to exit. And if you're so inclined, you may want to be looking for puts. And as you can see, that first initial box was roughly around the 81, 82 level, and we're already in the mid 70s. So see how this can help bring structure to intermediate term trading. Let's look at a weekly chart of Apple. Now this gave us a couple of signals, and this is why we say our methods are consistent. And what do we mean by consistency? Consistency really means, most people look at it at the positive way, but we're looking at a consistency that we know that every once in a while you will have some losses from time to time. It's perfectly admissible. It's okay. The point is you want a method or a technique that's able to recoup those losses quickly and get you back on track. So as we see initially in 2013, going back 5 years, we had our first all green box, and the stock roughly went from the mid 70s all the way up to 130 roughly. Then it started to have some trouble. The majority of the box was in the pink zone, and then we had our first all pink box right here. This was in 2016, in the summer of 2016. Someone looking at this would have sold, and they would have probably said, well, you know, I'm going to exit and go short. This was roughly about 95. And then what happened right after that? We went up, and if you were so inclined, we have our first green box in the all buy zone, the blue buy zone. So you would have covered and switched gears and gone long now, and that would have been a good idea, because roughly from 115 all the way up to 185, a good 70 points coming into this past week. So you will have minor losses from time to time. That is okay. What you want is a method that can recoup those losses sooner than later and then get you back on track. That was an Apple. Let's look at HD, okay? Once again, we have these rising boxes, but they're still not completely green. We didn't get our first totally green box in HD until last year, around summer of last year. And the price was roughly trading about 150. Now, we can see that we gained roughly about 50 points coming into 2018, but we've started to sell off. So this could be something that we could start to go and create a pink box, or maybe bounce back up. You don't know, but remember, had you used this as an entry point, that would have been 50 points in your favor. So this is why we say techniques are only giving you one piece of the puzzle. We're just sharing with you a high probability entry. It's up to you to decide how you want to exit. It's up to you to decide where you want to place your stop and how long you want to be in the trade. We look at JP Morgan on a weekly time frame. Once again, beginning of 2017, we had our first all green box in the buy zone. So this is when the stock was trading around 85, 86, and the stock is now trading roughly about 115. So it's gone up roughly about 30 points coming into this past week. And everything seems to be fine because it's still in the blue zone, the buy zone, and it's still a totally green box. So this one looks fine so far. Now here's an example of how this can work to the negative side. We see Mattel here on a weekly time frame. There's been a lot of news about Mattel as of late, about the CEO and about how the company's doing poorly. You know, Toys R Us just went belly up, and a lot of people are looking at Mattel. These toy makers now are not doing very well. Well, we knew as early as 2017, when price started consistently closing below the buy-sell line, that this was no longer something you should be holding as an investment. But how about structure in terms of giving you a little bit more confirmation? Or how about structure in terms of if you wanted to short it? Well, we see here that this is our first all pink box. This was in spring of 2017, so a year ago. You knew to be selling Mattel roughly around $22. The stock now is down about 10 points from that, down to the 12s. And you can see we continue to go lower and lower and lower. Excuse me. So the structure of the Darvis boxes gave us a lot of warning to get out of this a year ago. Let's look at Nike. Here's a weekly chart, and once again, it shows you how when the trends kind of relax and change, how you can get out if you'd like and then get back in. There was a buy signal here in mid-2013. The stock was trading at 30, and it went all the way up to the 60. So you would have made, doubled your money. Here's where it started having trouble in coming into 2017, and then the beginning of this year into this month, we have started forming our first green box. So this is giving you a second chance now. You may want to consider purchasing this. It'll be totally your decision, but according to the Darvis box technique, this is generating a buy setup. Let's look at Microsoft on a weekly basis. This was textbook showing you how easy it is to use these Darvis boxes and to apply them with the fluid buy sell line. In 2013, mid-2013, there was our first green box that was completely above the buy sell line in the buy zone. So that would have been your buy area, roughly around 35, and the stock is now up to nearly 100, and we haven't had a full pink box yet. So it's up to you how you want to initiate the trade, how you'd want to enter, exit, place your stop, but we would have given you a really nice high probability entry point back here. Let's look at ETFs now. A lot of people say, well, Steve, this is great, but what if I don't want to really use it to trade? What about using it as a market trend identifier? Sure, you can apply an ETF to this, okay, or an index. Let's look at the QQQs. We see here that coming back the end of 2015, we had our first green box, but nothing really happened. So you might have been stopped out or lost some money if you were investing or using this as a type of buy or a uptrend type of indicator. But then in August to October of 2016, later on that year, we had our first all green box again. And so we all know what's happened and continued in the markets. And we continue to be in the buy zone on the QQQs on a weekly basis. The QQQs are the ETF or the NASDAQ index, 100 index. So this is still telling you that the bias is to the upside, and it continues to generate structure all along the upside as it goes up. What if you're interested in the S&P 500? Well, you would look at the ETF that represents the S&P 500, which is the spiders. Here's a weekly chart of the spiders, and the same thing. In the beginning of 2016, we had our all green box, our first all green box. So this was telling you if you don't want to trade the spiders, if they're too expensive for you, well, this is just telling you, well, the market, the S&P 500 is most likely going to rally. So if I'm thinking about getting in the market, wouldn't this be a great, indication that the market most likely may be going higher? So I might start wanting to think about investing. Okay, pull some money out and start putting them into the market. It's up to you. But this is what we're trying to do. We're trying to educate you so that you can make your own trading decisions. And most people say, well, I'm going to ask my broker what he thinks of the market. Or I'm going to ask my friend down the street. He's dabbled in day trading. He should know what he's doing. Or I'm going to watch that infomercial and take that $10,000 class on trading and see what their master system tells me. You don't need to trade or invest in order, to spend all that money, time, and effort. It's as simple as looking at what the market is telling you right here. This all is very simply applied in a matter of minutes. You can just go through a scan on a nightly basis and see what's forming and what's not forming, and you'll know whether you should be in the market or not. It's as simple as educating yourself. Remember, there is a holy grail to trading. There is a holy grail to master success in the markets. It's called education. So let's recap before we go into question and answers. Step one, choose your stock. Now we say stock here because we focused on stocks today, but remember, you can apply this to any market. You can apply it to Bitcoin. You can apply it to currency pairs. You can apply it to futures. It really makes no difference. Commodities. Anywhere where price can be either in the buy or sell zone, where there's an overall trend on a weekly time frame, and you can apply the Darvis boxes. So it's up to you. We want you to use the weekly time frame, though, because it's been my experience that when you go into a smaller time frame, from daily down even less than that, you get these whipsaws, these ebb and flows of a lot of noise, and oftentimes they can stop you out or create a green box, pink box, green box, pink, and so it's not really conducive to a lot of overall trend or intermediate term trend trading. So in the beginning, we would say look at weeklies and then go down to smaller time frames if you'd like. Step three, choose the fluid buy sell line. The fluid, as you see here, when the back of the screen is colored, it gives you a different perspective as to whether you should be having a buyer's perspective or a seller's bias. It's that simple. So you don't have to be taught by looking at volume or listening to what the institutions are doing or seeing what the Fibonacci retracements. Just apply the fluid buy sell line. It's that simple, but that powerful. And then lastly, step four is click on the Darvis boxes. The Darvis boxes are usually found on just about any charting software package, but the way we have them with the specific colors is something that's unique to our platform. Now you can apply each and every one of these things on any platform. It makes no difference. So if you had some standard platform, even just something that your broker issued you, you could choose a stock, choose a weekly time frame, just plot a 50-period moving average. It wouldn't be the fluid, but it would be a 50-period moving average, and then apply the Darvis boxes. But it wouldn't be looking the same, and it wouldn't be as simple. This would be something you'd have to, have and make a template for each and every stock or market that you looked at. We showed you how simple it can be, and it's all one click away on our new PTS charting platform. It makes trading simple. That was our only goal, not simply to educate you, but to make education as simple as possible. So many people feel that, okay, well, Steve, I understand about education, but I took this course and I couldn't make heads or tails of what they were saying. It was totally above my head. And I totally understand, because when I started 41 years ago, that's the way I was taught by some of the traders on the floor. They were trying to explain things to me. I had no idea what they were talking about. My mentors took everything down to its basic level. They simplified it tremendously to the common denominator, and I was easy to understand. And so that's been my goal as an educator, to make things as simple as possible, make them so easily recognizable, so it wouldn't matter if you were trading 40 years or 40 days. It's all the same, and you could really understand it. And this is all encompassed within the PTS Primo Charting platform. So let's tell you about today's attendee discount for taking time out of your Saturday morning. We're going to offer you our new charting platform, PTS Primo Charting platform. Remember, it's designed to teach traders how to trade. I designed this with Pro Trader Strategies specifically to make it simple, to teach you how to trade so that you can be in charge of your trading for the very first time in your life. Now, we're going to offer you a 30-day trial for only $7. $7, think of that. All right, I'm almost certain that if you were trading yesterday, you spent more than that just in commission costs. $7, you'll have access to all of what I just shared with you and more. Let me share with you what actually you're going to be getting. You're going to be getting the enhanced buy-sell lines. You can use any through those number of ways in which to use the buy-sell line, but we would suggest using the fluid because it's the most popular, and we've had the most rave reviews about that out of all our different features. You're also going to get our Darvis boxes with the special colors, so you can see right away if there's an all green box in the buy zone or an all pink box in the sell zone. We're also going to throw in 2 entry techniques. These are proprietary entry techniques. So if you have a strategy or a method right now that is working all right, but the entries are faulty, you can apply these, and they will in turn just automatically generate buy and sell arrows that tell you where the best high probability entry points are. Okay? We're including our signal scanner. I want to take a few minutes to talk about that because I'm really proud of our scanner. We're always making improvements and updating it, and it's such a great tool because you can scan for, let's say, these entry techniques on a nightly basis. All you have to do is click on the scanner page, click on load symbols. We provide you with a list of symbols anywhere from currency pairs, stocks, ETFs, futures. You click on whatever one you want. You can even devise and create your own basket of stocks and click on those symbols, and they'll automatically appear in a matter of moments. Once they appear, you click on scan, and it will automatically scan for whatever you're looking for. Now, in this case, let's say you're scanning for those 2 entry signals. Well, a green bar on the far right signifies that there's a buy signal. There's an up entry bar in that particular corresponding stock. A red signifies that there is a sell signal. And once you do that, you just simply double click on whatever stock or chart that is, and you'll see the charts appear. And automatically the buy and sell arrows will appear as well. So this is included. You're going to get the scanner. It takes you, instead of looking through hundreds of charts on a nightly basis, in a matter of moments you can view through all these different charts and all this different information. We also provide you with over 90 technical indicators so you can experiment and tinker under the hood if you'd like. We also provide you with free Bloomberg TV. We know we have a technical bias, so if you are a fundamental trader, if you like to listen to news, if you like to find out what the economic reports are or the earnings are, we have a media page. The same thing, you just simply click on the icon and a media page appears next to your chart. It will give you the latest news and what's happening with earnings, economic reports, anything going on fundamentally. This is all included free on the platform. And then lastly, this comes with personalized tech support. If for any reason you're having trouble bringing up a chart, loading your media page, or finding an indicator, our tech support can help you in a matter of moments to resolve the issue. So remember, this is a 30-day trial. You're getting all of this and the technique I just shared with you today for only $7. So you have access to what I just shared with you for $7. You can experiment with it for the next 30 days. After 30 days, it completely expires. There's no obligation. You're not going to be recharged. You can decide for yourself if you'd like to continue with the process, or you said, maybe it's not my cup of tea. Thank you so much for the information, though. Here's how to take advantage of this great offer. Contact Pro Trader Strategies. I developed the platform with them. They are the PTS in the Primo Charting platform, Pro Trader Strategies. You can either email them. My suggestion, if you have more questions about the platform or different strategies you may want to be interested in, would be to call them at area code 310-598-6677. Now, the link you see at the very bottom is the link that takes you to that $7 discounted sign-up page. If you look on the chat box, I just posted a live link there in the chat box. So yeah, the link you see on your screen is not live. You'd have to copy and paste that. But the chat box on the far right will, if you click that on, it will automatically take you to that $7 sign-up page. So this is a great offer. We've given you numerous techniques in our Saturday webinar. Here's one more technique that you can apply to your trading, one more piece and golden nugget of education that you could apply to your trading to take it to the next level, because that's our goal. We're not here, trying to sell you some $10,000 system and say good luck with it. Don't worry. Going back 10 years, it seemed to work perfectly. So we just hope that it continues that way, and you'll find out sooner or later. We don't believe in that. We believe in solid fundamental education so that you can be in charge of your trading destiny for the very first time. So this is what we're doing. As you can see, in good faith, we're trying to teach you every weekend something so that you can start using right away. And for $7, I don't think you can find anything that inexpensive for such powerful information. I'm going to leave this information up here. I know some of you had some questions, and I'm going to open up the question and answer box. Question, Steve, do I need the platform to apply this technique? No, as I said earlier, you do not. You can use everything I've taught you today on virtually any platform, because let's say you're using TradeStation. Well, you can get a weekly chart on TradeStation. You can punch up a 50-period moving average, and you can use their Darvis boxes, but it won't look the same, and it won't be as stylized, and it won't be as simple. And so with what we've put together for you, it's right there. It's just 1 or 2 clicks away, and you'll see the colors. See, the other platforms won't provide these colors for you, and I really think we've gotten tremendous testimonials saying that it's the visual aspects that really help traders learn a lot, because seeing the colors gives them this kind of visual confirmation of whether they should be in the buy mode or the sell mode, whether that's a buy structure or a sell structure, and it makes things a lot simpler as opposed to trying to figure out subjectively where support and resistance is, or how much this volume was, or what the institutions are doing. There's too much discretion involved in that. But when you see the colors line up, there's nothing to think about. It's just all there for you. So this is extremely simple, and you can use it with any platform, but I don't think it gets better than the PTS charting platform. Anthony says, you are about the second person that's expressed 50-period moving average strategy setup. I appreciate the fundamental edge setup to execute trades. Oh, you're welcome, Anthony. Well, maybe I'm the second person, but trust me, I've been using this for 41 years. When I first learned the buy-sell line, I was on the floor, and I had been trading for about a year. This was about 41 years ago. And I said, that's it? That it's just a 50-period moving average? And they said, yeah, that's it. That's the first thing you need to learn. Because what you're usually doing is you're buying when you should be selling, and you're selling when you should be buying. And I thought that doesn't make any sense. I mean, I want to buy low and sell high. And they said, there's nothing wrong with buying low and selling high as long as you're buying in the buy zone and selling in the sell zone. But Steve, what you're doing is you're buying in the sell zone, and you don't have a profit, and then it goes lower and you lose money, and you're selling in the buy zone, and it continues to go higher. So once I learned this simple but powerful technique, my whole trading changed, and it got me on that path to consistency. And so I've often stated in my webinars that if there were one tool that I simply had to use, if I couldn't use anything else and it could only be one, it would be the buy-sell line. And guess what? You can start using that today. But we make it so simple with the colors, and so it's a lot easier, because we found in the past that so many students say, oh, this is tremendously powerful, this is amazing, and then some other fly-by-night system comes along that catches their eye, and then they forget all about it. So we thought, well, the best way to make sure that our students don't forget about it is by making the colors on the back of the screen. That way they'll always be there for them. So that's what we really try to do to make it simple. And obviously you don't have to have that on your screen. You can take that off of you and have a standard background. But we want it there just in case you stray by the wayside and fall for the glitter and magic of some fly-by-night system. So yes, it is a very powerful technique, and guess what? You can start using it as early as Monday if you'd like, okay? So remember, this is a great offer, only $7. I can't think of a better way. It's Saturday today. Most of you are probably going to go out to breakfast or out to lunch this morning. You're most likely going to spend about 4 times that just on a meal. Well, for 30 days, you'll get all of this jam-packed information that's taken me 4 decades to accumulate for only $7, okay? You can't even get a cup of coffee for that price anymore. So this is a great, great offer. Take advantage of it right now before it goes back up to, I believe, its original cost, which would be close to about $97 per month. So you'll get a very inexpensive $7 a month for 30 days. You can use everything on the platform which you'd like that is there on the trial. And then you can decide for yourself after 30 days if you want to stay on board or not. There's no obligation at all, okay? All right, so as we conclude this Saturday morning webinar, I just want to say thank you so much for taking time out of your morning to join us. I hope I educated you a little bit. I hope you got some information you can start using. Remember, you can use this and apply it with any platform, but if you really want to make it simple, if you really want to see how easy intermediate term trading can be, you have to use it with the PTS Charting platform, okay? We have a great offer for you today. Don't take advantage of it by waiting too long, but simply take advantage of it by signing up right away. Thank you so much for joining us. I wish you a great weekend and a great week coming up. We'll see you next time. Bye-bye.